The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday night. Friday morning in the States. Somebody just popped up a message while I was getting into this show today. And if you'll notice, there's no sound on Friday night here in the Philippines, and we soundproofed our office because we're next to a main road. Just all for you guys. Somebody's asking about gold levels today. Going to get into that in just a little bit. Just let me briefly hit a couple of main veins here of what's going on before today's trading. Not a lot of reports coming out pre-market or during the day, so that's kind of off the table. Draghi, if you've been in a cave and haven't really woke up, and this is your first news source, I'll tell you that Draghi is, there's no mystery to this. Draghi's like, hey, we're going to do what we have to do, that kind of talk, dovish comments. And as those types of comments come out, the default reaction is the euro gets devalued a little bit, the U.S. dollar gets a little stronger, and at the same time, China central bank, 7% growth is not good enough for them, and they see the necessary need to lower rates now. First time in 2 years they've even thought about something like that, and they want to keep ramping it up. They want to see what they want to see, and all this devaluation talk is very good for the U.S. dollar as far as valuations go, but who knows how that's going to ultimately end up, and we've been talking about that. I'm showing our scanner right now. I got a couple other fundamental things to talk about, but as we've been talking about, this is a massive positive breath here, and we talked about, guys, we're going to do a whole webinar on this and how to read this, how to look deeply into it. I'm going to show some historical charts on it, but this is the S&P 500 breath, and we've been talking about, even though the insanity is, just horizontal and vertical on the S&Ps, we've been talking about, these things, I'm not going to argue against them anymore. And when the breadth is positive on an intermediate to long-term basis, being the daily and weekly, now you can get some great trades off the 240 and 60 here. But this daily and weekly, until this breadth changes negative on either one of these dials, and again, we're going to do a whole webinar on how to read this and how to use the scanner to your best benefit. This is saying you need to be buying support. You need to be buying support because the long-term trend is up, all right? And, folks, pull this up. Oh, God, my charts. We talked yesterday about trying to buy above 2038, and now we're trading 2068. That's 30 points. There are any pullbacks down into 2014, 2019, and my goodness, my charts are messed up here. Are we still good? Yeah, okay. So as I kind of, get the signal back here. As I kind of adjust my charts, I just want to expand them out a little bit so you can see this. Here's that 2038. Yesterday we went down as low as 2035, and based on your appetite for risk, you want to be stopping yourself out trying to buy those leverage points at some point, because you can always get back in the game, as we've talked about. Some of the folks might look at this entire fair auction down into 14 and 19 as an accumulation area for longs, kind of doubling down a little bit here as long as the breadth stays positive. And the breadth staying positive is really given to you on these dials. So not to belabor this to death, but in the old days, we've gone a long ways pretty quickly. We've gone up pretty quickly in a short amount of time. And, things that go up that fast usually go down that fast. But until we get some triggers off of the breadth turning negative, I'm still going to be, playing the insanity game and buying this thing. So that's the daily situation on the S&P. Here's the weekly. Here's that 2014 area. We kind of closed above and came back and tested that 1419 area, then came up. So, again, this is – God dang it, I can't get my charts to work here. Okay, this is something that, here's our 240. So, what do you do now? I don't think you really do anything. I mean, I think if you play the game we talked about, buying above 38, we're trading 69 pre-market. There's really no new profiles up here. There's nothing standing in the way. As crazy as it sounds, even going into the stratosphere here, I don't really see a lot of reasons to take this trade-off right now. There's no indications whatsoever, in fact. So stay long and strong. I just made that up. Did you catch that, Michael? Long and strong. So had a little request to look at gold here. And I'm going to pull that up here and look at some levels on gold. I saw an article. I almost couldn't believe it on gold. We've been talking about, gold's looking really, really ripe on the long side, and gold just kind of did a moonshot right now. This is real-time quotes you're looking at. I've got real-time quotes here. Let's talk a little bit about the dollar as it relates to gold. And I was, before this spike up, we were trading, like when I was researching gold this morning, we were trading about 1194, and I was really happy as I was looking at that, because I read an article, again, another bearish article about gold, which I was happy to see because, please, everybody and their brother, get short gold right now and let's squeeze them out. But they were talking about, the gold had reached its highs, today and pulled back, and this was it, and blah, blah, blah. And I'm sitting there thinking, what kind of idiot wrote this article? Because the dollar – we talked about this spinning up here, compressing against these highs, not wanting to pull away from it. Now the dollar with this China and Euro news with Draghi and, whatever the guy's name is in China, who cares what it is. But, as this thing had kind of, their currencies had gotten devalued and the dollar had strengthened, gold really, even lately, I'm going to go back to gold here. Gold, on a relative strength scale, had really showed its hand like, man, you don't want to be short gold right now. God dang it, these charts. Let me get my charts right here. Okay, here we go. So here's December gold again. And as we look at gold and as we look at this compression above or building cars above this 1180 area, now we have the moonshot and we've cleared the 1198 area, especially with the dollar going up right now, which is usually, as you guys know, to trade gold, that's usually a negative sign for gold. Gold is just kind of powering through this, and if the dollar ever does kind of calm down a little bit and pull back, guess how far gold's going to go? Nobody will know because, by default it'll go up. So anyway, we've cleared the 1200 area now. We talked about not being short gold and being long gold and putting stops below 1180. Here's the short-term levels, 1201 for gold. As you can see that we've got two inflection points lining up here. And by the way, if I want to see those on the scanner, I'm going to go in here. I'm going to get rid of that. I'm going to get rid of that. I'm going to go to the futures here. And that should populate pretty quick. Thanks for that note, Oda. Well taken. I agree with you fully. Let's just pull up gold here. So as I look at gold, here's the inflection points we just noticed, 1201.70, 1198 on the daily unfair highs, new box that has appeared in concrete in. But as you can see, we've got green across the board now, and we've got a new box attempting to appear possibly on our weekly. So that's what that means. So let's go back into that. Come on. Al, I'm not going to say any bad words here. But as we see this thing, it's Friday. It's a yellow bar. It could predict a new weekly box appearing for Monday's opening. That's what that means. So again, here's the unfair lows at 1206. We're trading pre-market here. Let's see where we're at. 1205. So a close above the current unfair lows on a weekly would be super bad for shorts. All right. We cleared the daily 1198. That's our intermediate term, and that's a new box, and that's very, very bullish for that to happen. And coupled with the dollar that Oda's given some very good information on, by the way, and thank you very much. Point taken. The 240s, 1201, 1198, that's in the same vicinity. Then you got 1206. And if gold can close today above 1206, I'm going to be a happy camper here because, 1180 on that breakout on the dailies here, and then to be able to kind of retest that a little bit, go higher, those are some good points on gold. And I think we could move much higher if the dollar just, comes down just a tad here. And who knows if that's going to happen. So anyway, looking at silver, this is kind of something I looked at this morning. 1650, new box appearing, but we're still below. It's just having a hard time getting out of its way. I don't, necessarily like this as good as gold. Good as gold. And 1653, let's see, what is that, 1653 and a half? 16, let me just give you the mark here. Yeah, 1653 and a half is the unfair highs on silver while we're talking about gold. So that's the intermediate. And again, we also talked about this, so-called intermarket spread between gold and silver possibly widening, and I think that's going to be the case. But you've always, you can't just go long one contract to gold and short one contract to silver, as we've been talking about. You need to monetarily balance out that equation so you don't get hung out to dry on an imbalanced equation. So again, you need to kind of, what's a contract to silver worth monetarily, what's a contract to gold worth monetarily, and try to, if it's 3 contracts of silver versus 8 contracts of gold, you just need to do that. That's the way you trade spreads. Okay? All right. So as we look, let's just look at one more thing before we go to break. Let's look at the NASDAQ really, really quick because we talked about the S&Ps. And the NASDAQ breadth has been super, super positive also. Here's the situation on the NASDAQ. That kind of got above and retested a couple of times, and boom, 4281. I did not think in my wildest dreams we'd be talking about these numbers before the end of the year, much less a month before the end of the year. But here's the situation on the NASDAQ, 4241 and 4244, most recent unfair highs in the 240s. And I don't see any reasons to take this off either on the long side. So we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Got crude oil up right now. Here's the weekly view. This is January crude. We've kind of rolled into the January contract. If you're trading futures, 77.36 right now, and as you can see, just kind of par for the course as December. Here's the situation, and January 78.48 unfair highs on our daily box. So again, little bit stronger situation than December contract. Let's just kind of look at this a little bit. Here's the daily situation, and as we've seen, still no technical damage that has happened on the January contract. Goodness gracious. Let's go back here. Whew. Wow. Yeah, July, first time we had any technical damage against profiles regulating this straight down on a daily. So the 78.48 is going to be a big number. If we can close them up there, we might have a new weekly profile that will appear that will give us some more inflection points on a very long-term basis. And a close above 78.48 is going to provide literally first time since July any kind of technical damage on crude, like I said, and we're going to be able to look at that inflection point to trade above or below. But, don't have a lot of conflicting information here to not just kind of sell that inflection point at 78.48. So, again, I'm kind of licking my lips, hoping that we get up there just to kind of keep turning the rents the same way as we have on these crude oil trades all the way down. And we've been talking fundamentally bearish news on crude oil all the way down. And again, there's some reports that came out, excuse me, maybe crude oil is not going to go any lower. Maybe it's the buy of a lifetime, blah, blah, blah. But until we have some technical damage above 78.48 and closes above 78.48, even on an intermediate basis, there's zero reasons, in my opinion, to start picking bottoms on this thing. So that's my take on crude oil. All right. Talked a little bit about soybeans the other day. And I'm missing soybeans here. Where'd my grains go? Okay, here we go. Sorry about that. And we talked about buying, being able to leverage on January beans off of this 10.04, 10.02, 10.01, excuse me, 10.01 and a half, 10.04 kind of dual time frame inflection point lineup that the scanner actually picked this out for me. I mean, I was kind of like, let me surf through things that are sitting on the bottom of profiles. And, soybeans came up, and I was looking at the S&P 500 soybeans, excuse me, the futures currencies. I think I was looking at the Shanghai because I actually trade some stocks on the Shanghai via a broker friend of mine in Hong Kong. But this came up. I was like, you know what? Fundamentally, I like beans. We're at a good high probability setup, and we bounced about 25 cents off of that low. And I feel like we could actually go back and get back into the 1068 area for this. Probably not going to happen in a straight line. There's going to be some volatility and pain along the way for long, so there's going to be some pullbacks. But, nice little trade. It was a nice little waiting game. Just wanted to show you guys some of the things we talked about the other day when we were down there. And I'm trying to get my charts to change here. Interesting. Okay, there we go. Okay, that popped up the chart twice. Okay, here we go. All right, so that's the situation on soybeans. Just wanted to point that out. I think corn and wheat are a little less tradable right now. So I like the bean trade more than any of the other grains. I want to take a look at something else. We looked at Wells Fargo, and this was something else that I picked off the scanner. WFC, my most hated bank of all times right now, and I've got an account there. And we talked about if we could get below the 53.06 area combined with that daily inflection point, I'd feel okay with the close below there to kind of start looking at this from the short side. But the S&Ps, we talked also about we needed some confirmation and we needed some breadth change situations happen with the S&Ps, and it wasn't the best short. No, it wasn't. But we never got into that trade because it never really provided the sanity and the conviction of even going down that road. And I wanted to pull this up kind of as an education primer also, because this is something that, the scanner and the profiles, I think, kind of kept you out of that trade. It's a no trade right now to me. So anyway, that's two little things we talked about the other day from the scanner, and they're kind of still on my radar screen. So we'll be right back, folks. I hear the music playing, and that means some ads are coming up, and you guys should listen to them. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We're going to grab Eddie in just a little bit, talk about currencies, but I wanted to bring up the notes here just, again, market's just going crazy again, 20, 60, whatever, it's up there now. Notes, man, notes are your best friend for the long side, in my opinion, still. 26.15, this is the December contract, and again, got to call it quits below 126 here. But again, can you imagine? I mean, like, this is nuts. I mean, this is the again, I'm going to get in trouble for saying this, but this might be the easiest trade on the books I've ever seen. So, this is the type of thing, compliantly, I probably shouldn't say that, but it's the type of thing where it just shows its hand. And if we're wrong, we're wrong. It's not a lot of pain, but I mean, it's kind of an easy situation here. Yeah, take it to the bank. Yeah, I know. I should never say stuff like that. You know what's weird, Otis? These watchdogs, they watch smaller entities, and then when it comes to, J.P. Morgan, they let them slide for scalping people out of $1 trillion and give them a $1 billion fine. It's just nuts. Anyway, let me look at the 30-year really quick. Eddie, are you on? Eddie, you with us? By chance? Okay, we'll pick him up later. Let's take a look at the 30-year. I got to tell you a story, Oda, because this is the the damnable shame of it, really. The NASD, well, I guess they're called FINRA now. I was in, I went to Florida to trade back in the mid-'90s. There was no internet or reliable internet, and there was like these T1s and these point-to-point lines, and it was just, man, my God, you can electronically communicate to these other servers, and it was that kind of thing. It was just mind-boggling that these things were out there, and you couldn't trade at all through the internet. But we had a really cool. I went down there to trade, and I was like, okay, trading's tough. There's some risk in it, but the place I was trading at seemed to always make money. The house, So I kind of started thinking, okay, well, maybe I want to be, maybe I want to be the casino, maybe I want to be the house. So I got involved with this brokerage firm down there, and the compliance was pretty loose back then. The SOS Bandit thing just started up. Exactly, Collective VIG. Yeah, exactly. Yeah, I was one of the bad guys. So when I started down that road with them, kind of being more the house, the compliance was really, really loose back then. And I mean, you could kind of like make commercials with just the weirdest, wackiest stuff, and kind of make jokes and kind of fun. And before Revco imploded, obviously, I was doing a deal with them when they went down, and was actually moving business to their equities division, believe it or not. But we'll save that for tomorrow's show. It's kind of unlucky how that worked out. But and I was in Chicago then. They were right across the river in another building. Yeah, well, that's another story for tomorrow. But anyway, the compliance was pretty loose. But then, as kind of time marched forward, the compliance started getting a little more severe on the smaller broker-dealers, because that's what the NASD could really kind of stick their chest out and come in and pilfer through everybody's files and, oh, my God, you didn't cross the T here, and you didn't educate your brokers on money laundering, blah, blah, blah. And it was just that kind of scene. And we kind of figured out over time that they picked on the smaller broker-dealers because that was what they actually could pick on, because the larger ones really had so much leverage in the game that they kind of let them slide. I mean, you remember when E-Trade, started giving out a free computer to, if you open up an account with them, they give you a free computer that had the baby on the commercial, all that kind of thing. Just some really wild stuff. In no way could a small broker-dealer get away with all that, because they'd come in and start, on that note, they'd start telling us, hey, you're enticing people to trade, and you're making it as if this is all easy and they're going to make a bunch of money, and therefore you're fooling the public. And what has happened really is the amount of broker-dealers that were out there, they did this by design. The amount of broker-dealers that were out there has really been cut by about 70 to 80% now. And they kind of figured out that there was too many people in the game, and that was the lobby within the FINRA or NASD back then by the larger players to really kind of whittle the space down to where there weren't as many players and there was more meat on the bone for them. So, okay, so Eddie's not going to come on, right? Is that what we're saying, Al? That's okay. Just want to know. Yes or no? Yeah, no, he's going to try to reconnect. Okay. So sorry to get off on a tangent, Oda, but I was just kind of, spinning into that frame of mind because of I forgot what triggered that. But anyway, here's the 30 year. And Tom O'Brien will tell you about that if you ask him. He'll tell you that the compliance has gotten ridiculously sick for smaller broker-dealers, and therefore, they either just kind of rode you out on Mickey Mouse infractions or put so much on you that you had to hire so many people, and it was so much overhead to run a broker-dealer from a compliance side that it wasn't worth it after a while. Then the margins came down. It's kind of it's kind of a sad story to some degree. Here's the 30-year. 140.27 is the unfair lows on our current daily profile in the bond. So that's kind of where I'd have to say uncle below there. Any closes below there, like we had one back in the 6th of November, but we kind of, again, just kind of retooled ourselves above, retested. And, with the market doing what it's doing today, the stock market today in particular, this thing's really showing its hand just like the 10-year. So I'm still a big fan of being long treasuries, if that makes sense. I probably didn't make much sense talking about the broker-dealers, but eventually got away from that and ended up being in Chicago and trading full-time. But and that's where I met Pete Stottlemyre, and that's where kind of some of our information is a derivative of that anyway. So, again, have we got Eddie yet? No? Yes? Eddie, you there? Okay, so what we're going to do without Eddie is we're going to talk a little bit about currencies. And, with Draghi talking, again, this has kind of been we'll look at natural gas January in just a second. Let me just take a look at the euro here. And we've been, we kind of hoped that we would get back to, I hate to use that word hope in trading, but 126.34. We were hoping 2 days ago. And what did we reach a high at? 126 even. We never really got there. That was going to be the maximum leverage point for me. And I was just waiting like a something for that like a wolf at the edge of the forest. But 126.34, it never got there, and that sucks because I was just patiently waiting on that one. But on the 240s, here's where we're at. I mean, you had a shorter term leverage point around the 125.60, let's call it. And now we're back in the game really hardcore down here. And since he started talking this, talk that really I don't think was any mystery to anybody, we've just trailed down. So where does this – and we talked about being, only short the euro. So where does this end? Okay. No Eddie today. That's okay. 125.74. Weekly unfair lows. When we got back down below there, that provided some more sanity today, in fact, on being short. So now you've closed below, you've retested, you've actually kind of retested with a little bit of noise in the same vicinity, and now you come down. And where does this thing stop? I mean, I think we've talked on previous shows that 120 is easily in order for this euro. All right, and why 120? Because I did a little bit of research in the annals of profiles in the past, and that seems to be something. And combined with the whole number itself, it'll probably overshoot it just a tad anyway. Just because that's just the nature of price action. But I don't. Again, this has been the situation where it's been okay to be short, not okay to be long for a long time here, as you can see. So. That's trying to get my charts to work here. Oh, God. Here we go again. Okay. The British pound. Again, guys, trying to get my charts to work here. The British pound, not a lot of sympathy trade with that. But, again, one of the more easier trades on the books right now. Come on, guys. I don't know who to blame here, Amazon or eSignal, or the CME. Here we go. Let me stretch this chart out so you can see it. The British pound, talked about a new profile that appeared the other day. We also talked about a little bit of divergence here, but I think, the overriding fundamental situation on the pound here and the levels 156.25, up top 157.66. So any technical damage, any closes above 157.66, I'm going to have to be out of this long-term trade, which we've been in short, recently that 165 area, but even higher, kind of way back when. See if I can spread this out so you can see it. Yeah, it's been like 170, but anytime we get a close above 157.66, I'm going to have to sit on the sidelines on the short side on the pound. All right. Otherwise, like we talked about, the guy from FXCN, a friend of mine who's in Hong Kong, a lot of people are just hanging with these trades, short the yen, short the pound, short the euro. Not a lot of people long the dollar because they don't actually have a big futures operation there. They're trying to build one, but they're not having a lot of success. So, and breakouts below 156.25 here. Let's take a look at natural gas. Somebody's actually asking for that, and that would be NGF5. Okay. Wow, had some volatility the past couple of weeks. I hadn't really been looking at this. The weekly unfair high is 4.319 weekly unfair highs. It's been a little nerve-wracking here, I guess, lately. But as soon as we got back above the 40.58 area, and especially above the 4.381 area, I know last week we had a big dive down. We've kind of gone back up. So this has kind of been stop-out city for getting long or getting short here. But what do we do now? I like the action on the long term for the longs because there's been, this kind of radical, from a pure technical analysis standpoint, that sometimes indicates bottoms in itself. And that's kind of what's going on here. So the weekly, that's kind of, the attitude that I have, but on the daily, God, man, come on, A-signal. Okay, on the daily, 4.633 is definitely a lid here. And to be honest with you, there's not a lot to key off of here on the daily. So we'll come right back in the last 5 minutes. We're going to go over a little bit about the concepts of how I
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Dave David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I've got Halliburton up right now, and what I was doing was trying to find stocks that were kind of had already, eclipsed most recent unfurloughs on a daily and come back and retracing. Halliburton kind of fitted the bill there. 49.62 unfurloughs. Pre-market, we're trading 49.90, so we're kind of edging above there. But just pay attention to this one because we had that weekly close. We're kind of coming back up and trying to possibly retest that area intra-week. And this, to me, with crude oil, bouncing a little bit here on the January contract, I'm still looking at this as a short opportunity, even though there's a lot of move down in this stock. I'm still looking at this, short opportunity for sure. And the good news is if we're wrong, and we can get back into this maybe at a higher level. But again, 49.62, the weekly unfurloughs, and then the top 53.95 for kind of a maximum leverage point on Halliburton. Somebody asked me to talk a little bit about the profiles, the boxes, how they're outputted, and I really wanted to bring Eddie on for that because he's one of the architects of some of this. But in a general sense, you can look at these profiles kind of as the meaty part of the bell curve where most of the data should lie, and these derivations of these profiles, really kind of, we try to take the original market profile, take the subjectivity out of it, strip it out, turn it more into rules-based, objective viewpoints on the markets based on kind of profile theory or profile technology or whatever. So these boxes are outputted by way of a proprietary algorithm, and they're kind of, you can take a lot of programs now, I guess these days, and kind of make your own profiles. We've got a market map that does that, and it'll kind of auto-generate some things out the way we've got some algorithms in it. But we were, strictly and solely concerned with a lot of times, what are the envelopes of these profiles based on some standard deviations, and also, how wide or narrow should they be, and when should they come out in general, and how long should they stay in force. So there's kind of a lot in the math of this, and some of the results of that, I'm not going to tell you the exact formula. Somebody in a conference in Shanghai, it's about 400 people. I got in trouble that day, actually. I actually got pissed. Bloomberg wasn't happy because a guy in Shanghai in front of about 400 people was wondering why he couldn't have the formula because he needed it to do his work. And I kind of politely told him, if you had $100 million, I'd be more than happy to fork it over. And he got kind of pissed and got up and left. But really, how can you even ask that? Well, what's the formula? I mean, we can give the general concepts, but Bloomberg told me not to embarrass any more of their clients in front of 400 people again. But anyway, so there's innuendos that we look at kind of within some of the framework talk that I just gave, and some of those things are when profiles stay in force a long time, or they're very thin, or they're very wide, or they're coupled with a couple of other things, and we'll do a webinar on that. I think we've got one scheduled for the first or second week in December, but TFNN will output that. We'll start getting a little bit more into the nuts and bolts and the guts of that, and how it relates to the scanner in general, and why that thing is kind of a lifesaver for me, and how do we use that. But we'll talk a little bit more about this Monday. I appreciate you asking, and stay tuned for Steve Rhodes. He's next, and he's awesome. You'll enjoy it. Thanks, guys. We'll be back Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.